Welcome back to the channel. My name is Patrick, and in today's video I'm going to show you how to trade with the trend. When I first started trading, this was the first technique or strategy I was showed because it's very easy to learn as a beginner. So in this video I'm going to show you two ways of doing it, using supply and demand and also using indicators. Now in return for this, all I ask is you hit that like button or hit that subscribe button to continue supporting this channel.
Alright, so today I've got something a little bit different for you. So I've showed you how to scalp, I've showed you how to do reversals. Now I'm going to show you how to trade with the trend. So it's not you can trade with the trend using supply and demand. It's not what I like to do, but I am going to show you how to do it if I was to do it. First we need to establish a trend. Now with trading on the trend, you can see a trend, you could trade this on any time frame. Look, there's a trend here on the daily. A trend, is basically, here's a downtrend. So we've got a high here. Let's zoom in. We've got a high here, a low there, a lower high, a lower low, a lower high, a lower low, and so on and so on and so on. And that's the trend, right? Problem with trends, they always break. So you can't just take a trend and hopefully it goes to, 1,000 pips or whatever. So that's a problem with the trend. You don't know when it's going to end, yeah? Problem with the trend, you don't know when it's going to end. I like that. So here is an uptrend. So we have a low here, a high, a higher low, eventually a higher high there, a higher low, a higher high, and so on. So that's your uptrend. That was on the daily. I could see the same thing on H1. Time frames, it doesn't matter. It's all the same thing. It's just really showing you the same overall picture on a different time frame. So don't focus too much on time frames. So what I'm going to do now is actually show you how to trade this two ways, right? I'm going to show you how to do it with an indicator, and I'm going to show you how to do it with just reading supply and demand. So let's find a nice trend. Okay, there's one here I like. Let's get rid of that for now. Okay, so that's a nice trend, but I'll show you this one because this one is a lot cleaner. So we got on the 17th of January. Let's zoom in a little bit more. As you can see here, it's a very clean trend. So we have a low here, a higher high, a higher low, a higher high, a higher low, and so on and so on and so on, right? So we've got an uptrend. Okay, so how do you trade this? Some people like to use indicators, some people don't. If I'm not using an indicator and I'm not reading supply and demand, maybe I draw a channel here and I look at it as every time it comes into this channel, it's bouncing off around here. So next time it comes down here, may want to buy it and go up. Next time it's up there, may want to buy it to come down. And that's one simple way to read it. So that's a bit more using supply and demand, and that's using just drawn out lines using channels, right? Because trends tend to move in the channel until they break, and then they go sideways and they continue up or they change directions. Okay, that's one way of reading it using supply and demand. I'm going to show you a popular way of reading it using an indicator. So when I first started trading, I was told, trade with the trend and use indicators. There's nothing wrong with trading with the trend. In essence, it is a good practice to trade in the direction the market is moving, right? It's important, however, to have a bigger picture overview of what's going on so you don't find yourself trading in a smaller time frame trend when the higher time frame trend is on a downtrend and you're trading up. So it gets a little bit complicated. Let's keep this simple anyway. So the other thing I was told was to use an indicator. I did a course actually. I really regret. I did a course where I paid it to use to be taught how to trade, and I was taught how to use trade using an indicator. So I'll show you the indicator. This is the most basic way of trading with the trend, and this is what most people are taught. And I'm sure if you're watching this because you want to learn how to trade with the trend, this is how you would be taught if you are watching other YouTube videos talking about the same subject. So we've got moving average here. We've got the option of smoothed or exponential or whatever that is. I'm going to go for smooth, and trading on a smaller time frame here. So we're going to use 10 period, right? And that's it, right? Just one other thing. What I've done, which I just did some back testing with this before I started this video, I apply the settings. Normally the settings apply to close. Yeah, so I'll show you what that looks like. So you can see it goes to the close of the candle. So it's trying to follow the close of it. So close there, it hits there, close there, it hits there, and that's what it's following. I placed this on I tried it out on the open, I tried it on the high, and I put it on the low here. Now that I'm assuming, as you can see, it looks better. It's hitting the lows here, and that might be something that's useful if you want to trade with the trend. If you're not uptrend, put it on the lows. You want the moving average to be on the lows, really following the lows, because you want to catch the lows. You want to enter in the low and push up. You don't want to catch it on the close. You don't want to catch it on the high. You don't want to catch it in the middle. You want to catch it in the low. So that's a little trick, or I just discovered now. I literally took about 5 minutes ago. But that reads a little bit more better for the example I'm showing you, so that's why I'm sharing that with you. So I think that alone deserves a like. So if you are trading with trend and you've never heard about that, maybe putting on a low, there you go. There's a like right there. So I think you know what to do. But anyway, I digress. So here we go. So this is how I was taught. You got the moving average. You got your moving average here, price is pushed up. When it pulls back into that moving average, it gets underneath it here, and as it's breaking back above, that's your entry. Okay, so if I entered here, I'll be risking, my stop loss would be just underneath here, so I'll be risking 13 pips, and I'm trying to beat this high here to continue on, so that's 25 pips. So that's a 2-to-1 straight away. If you held it, it would have continued all the way to 67 pips. This is GU, by the way, so yeah, GU moves really aggressively, so that's really possible. So as you can see, trading with the trend, if you did that one trade for the day, risking 13 pips, getting 60 pips, or 1 to 5, you're livid, you're happy, you're good for the day. So there's nothing wrong with that, but you need to wait for the trend to be established, and you need to wait for for it to get to TP, which can take a while. So for it to be established, you need the low, you need the high, you need another low that respects the previous one, and you need the high. So you wouldn't even trade it that, you would be looking for entry here. So again, moves under the moving average, respecting our previous low, come back over the moving average, enter in here, our low is here, 7 pips, and we try and beat this high, 32 pips, and if you held it, you're getting 50 pips. Or what's that, 1 to 5, a little bit more than 1 to 5. So very powerful way of trading. But again, trends are not visible every single day. This is an example I found, and this is obviously in hindsight. This is after it's happened. In real life, you need to be a little bit more patient, a lot more patient to find the trend and complete the move, right? So, but as you can see, good risk to reward, very easy way to trade. And that's why a lot of beginners are recommended to trade with the trend. However, so we're looking at this price action here, and I'm going to read this now with a supply and demand outlook in a second. So we have a low here, pushes up high, and it pulls back down, and we're looking at this entry here. How can we enter there? So trading with the trend here, we're entering there, just about there. Some people say wait for the candle to close, so we'll be up there, yeah? So that's your entry. You're looking to beat this high, that's 37 pips, and your stop loss is just there, 16 pips. Very simple, right? However, if we got rid of these indicators, we could see that all this is, hold on, all this is just simply supply and demand. So buy indicator, all this is simply supply and demand. So the same price action, I'm going to read it using supply and demand outlook. Yeah. So here's our base here, and price pushes up. There's a little imbalance there. So when price returns to this zone, yeah, I'm looking to take a trade. So let me just box that out. So from this high here to that low, that is my zone. Yeah. So there's two places, three entries really, but two places you could enter. You could enter at the open. So here is where it broke out and would have left some remaining orders potentially. So you could enter at the open. As you can see here, when price returned here for the first time, it reacted straight away, gave us a, what was it? So you could scalp this and it would have given you a instant 19 pip reaction using supply and demand, right? The second entry using supply and demand is about 50% of this move here, this zone here. So that's roughly there. If I look, read it with the naked eye, that's roughly around there, yeah? So I'll be looking to take an entry here. So price returns, reacted on the open, and it went down to the 50% mark. Yeah, as you can see, it stalled here and it started buying up there. Why did it buy up there? Why did it start going up from this point? If you look here closely, you can see that's where this move, this push up was generated. So it got there, slowed down and pushed up. So that would have been my entry. So that's a difference of 7 pips. So you would have got a better risk to reward. So risking 7 pips and aiming for 45 versus risking 16 pips aiming for 45, right? So you can actually read these charts, right, just using supply and demand. And that's what I want to show you. So really, trading with the trend is supply and demand. Using an indicator, I don't personally recommend it. And the reason is because indicators tell you what has happened, what price has done already after it's happened. It won't tell you where price may turn around. It won't tell you where price may bounce from. That's supply and demand. Look, down here, pushes up, that's demand. I know if price enters here, I'm looking for a buyer to take it up. It didn't. If I threw an indicator on, it wouldn't tell me nothing either. So again, here, pushed up, that's demand down here, price enters demand, and look what it did. I'm going to throw on the indicator quickly and see if it makes a difference. Just that price action there. The other problem with indicators, they are lagging, so they only tell you what has happened, but also a lot of indicators could blind you to what's going on the higher time frames and so on, because you're too focused on indicators. And this is coming from someone who's used them. I use moving averages, I use MACDs, RSIs, looking for divergences and stuff. I mean, divergences, they work on occasions, but trust me, from my experience, you could get really lost and frustrated using RSIs or MACDs looking for divergences. But anyway, they do work, but you know, I think all of them are really just extensions of supply and demand, and it's just another way of reading it. Some people need indicators, some people don't. So okay, so this move here, so went over, come under, came with the indicator says we should have entered there, and you would have got that move. And as you see, it was bouncing off there, and you would only get out when it starts closing underneath the indicator. So there, right? Supply and demand, 50% of that move there. We're looking roughly of an entry there. So it's just below the indicator entry. And as you can see, it's just an extension of this. So look, price hit there, it moved off. The next day it came and hit there. That indicator didn't tell you nothing about that. Supply and demand did. It hit there, respected that, hit there, and it went off. So it's, like I said, it's all extensions of supply and demand, right? And you could read this on any time frame and so on. Okay, so just reading this right now, using supply and demand, right? I'm going to show you the benefits of reading supply and demand versus the indicators. Right now, the indicator is not telling me nothing that's going to happen, right? But I'm going to tell you what's going to happen using supply and demand right now. Let me get rid of this indicator quickly. Distracting me. So why I'm not trading this move is because I've already taken my trade for today and I'm done for the day. So I thought I'd share this video instead. So using supply and demand. This is a lovely move, to be honest. So we've got consolidation here. It pushes up, right? Where did it go to? It went to this supply zone here. And as you can see, I've marked it out already because it's in the key area. There was a reversal pattern there and it pushed down. So price pulled back up there to clean up some of this inefficiency that was left there, and it's pulling back down. Where is it going to? It's looking to run these lows here. Okay, where's price going to? Eventually, at some point, it's going to run all these equal lows. Why? Because a lot of people would have placed their stop losses here, riding this trend up. Yeah, this is going to break through, and where's it going to? It's going to head down to this demand here. Okay, it's going to head down to there, because if price wants to turn around, buyers are not going to buy it here at the tops. They want it at a discount. They're going to buy it here at the lows. Yeah, this is the last zone where it pushed off from. So this is going to run through all this and get into that zone. The indicator does not tell us this, right? Let me throw this up again. So if you saw this, you could have caught this reversal pattern first, right? That was should take it. So that's a Quasimodo reversal pattern. There's a video on that on my playlist if you have a look. From that reversal pattern should take it back into this zone here, 116 points. Eventually it's going to get there. I don't know when, but eventually it's going to get there. Indicator won't tell you that. It will get there. It's a matter of when. Okay, so you can write that down. Now price is moving down. All this was what's this? This was a trend up, and it's using supply and demand. Supply and demand tells me, yeah, that this trend, every supply and demand zone here has been used. So none of it is valid. So this is all just liquidity. So again, if we were the big banks and you're looking to stop people out, you're aiming for that zone. You are really looking to take all these zones out, all these lows out, getting anyone who wanted to hold it to try to beat these highs. You're going to take all of them out, and where you're going, you're going to take it back there. So sellers from here are going to try to take price back down there and leave it. They will try to push it down, but if buyers step in, they're going to try to take price up again. And that's how it works. That's how the market works. That's supply and demand. Okay, that's all you really need to learn. Learn how to read, identify supply zones, identify demand zones, and learn how to trade that. And to do so, you hit that subscribe button and stay tuned and keep updated with the progress and the videos I'm releasing, because that's all I talk about really here. I'll show you examples of my trades, and I'll show you examples of the charts using supply and demand. Okay, so I'm going to wrap it up there. I hope you appreciated this. It's a real insight into reading the charts using indicators. You can do so if you like, if you feel comfortable, but really when you get to a level of not needing them, you see a lot more, and you can see where price is going rather than trading based off what's happened already. Yeah, okay, so I'm going to sign out now. Hope you appreciated that. If you did, you know what to do. Hit the like button, and if you want to stay tuned to my progress, hit the subscribe button. Yeah, this is Patrick signing out, and until next time, peace.